When most people think of investing, they imagine a gamble, shouting traders, flashing red numbers, and the stress of hoping a stock price will go up just to sell it tomorrow. But real investing doesn't require staring at a chaotic screen. To understand how it actually works, we need to leave the stock exchange and step into an open-air market. Meet Amma. While shoppers around her are rushing and haggling over every penny, she is calm. She moves through the stalls with a specific plan. Amma follows one simple rule. Price is what you pay, value is what you get. Amma ignores whatever price the vendor is shouting. Instead, she looks at the fabric itself. She checks the tightness of the weave, the quality of the dye, and the durability of the material. She is measuring how well this item will serve her over time. This shows what we call intrinsic value, or true worth. Just as Amma estimates how many years of use she'll get from a well-made basket, an investor estimates how much total cash a business will put in their pocket over its life. Amma walks the aisles, looking past the noise to find those rare moments where the real-world worth is much higher than the price tag. Every day, Amma passes a stall owner named Mr. Mensa. He represents the stock market, and he is a very emotional seller. His daily mood swings dictate his prices. On sunny days, when the market is packed and everyone is cheerful, Mr. Mensa is euphoric. He puts high price tags on his standard baskets, hoping someone will pay a premium just because they're in a good mood. But when it rains, or a rumor spooks the crowd, Mr. Mensa panics. Desperate to sell, he slashes his prices far below what the items are actually worth. This chart shows how to use those mood swings to your advantage. You have a high bar for the business's worth and a lower bar for the panic price. This gap is the margin of safety. You buy when the gap is huge. This safety net absorbs the shock if your math was off or the economy hits a rough patch. When you treat the market's mood swings as an opportunity, you can stay calm while others panic, securing your future gains early. However, not everything in the bargain bin is a good deal. Some items are cheap because they are broken. Buying a failing business just because the price tag is low is what we call a value trap. To avoid that trap, you look for an economic moat, a defense that keeps competitors away. Coca-Cola is a classic example. They have built a brand so trusted that people reach for it even when cheaper options are available. You also have to check the business's financial health. If a company is carrying too much debt, a single bad year could lead to bankruptcy. You want businesses with strong foundations that can survive hard times. Finally, Amma avoids the stall selling electronics because she doesn't understand how they work. This is her circle of competence. If you don't personally understand how a business makes its money, you don't buy it, no matter how cheap it looks. The discipline to walk away from confusing or risky investments is what keeps your savings safe. It's about knowing what you don't know. Eventually, the panic in the market subsides. The crowd calms down and begins to notice the high quality of the assets you bought at a discount. This line graph shows the transition. In the short run, the market is a popularity contest, but over the long term, it always rises to reflect the actual business results. As the investor Warren Buffett famously says, you should be fearful when others are greedy, and greedy when others are fearful. This philosophy turns investing into a steady climb. You buy pieces of high-quality businesses, letting them stack up cash year after year. Before you ever part with your money, you run every opportunity through a final checklist. Do I truly understand this business? Can it defend against its rivals? Is the price a deep discount? Am I prepared to wait years? By combining independent analysis with extreme patience, you take the guesswork out of the market. You turn it into a reliable engine for building wealth that lasts for generations.